Hello, everyone. My name is Aaron Hulkran, and today I want to talk about what are capitalization rates, or cap rates for short, and what are they used for. So, I am not an accountant, CPA, or financial planner. All this information should be for educational and informative purposes only. So, let's dive in. So, cap rates are, we use the NOI to determine cap rates, and we use it to help analyze income producing property. Cap rates are calculated by identifying the NOI, which is on the income statement, and using that to determine the cap rate in several different ways, which we'll get to in later slides. Again, we're gonna look at this. We're gonna exclude principal, interest, loans, capital expenditures, depreciation, and amortization when we calculate that NOI when we're analyzing the cap rates. Long and short of it, cap rate is the return if we paid all cash for the asset, or we were going to buy it with all cash. So it's a great tool for analysis. What do we use a cap rate for, right? We analyze the current performance. So we're going to look at the current performance of an asset. We can do that with a cap rate. We can analyze future pro forma numbers and use the cap rate to help us determine a lot of information from our pro forma. We can use the cap rate to look at buying and selling the asset, to manipulate the data and understand what we have in income producing property. And we can do a side-by-side comparison. So if we're looking at maybe buying two different properties, one of the analysis that we want to look at is what's the cap rate we'd be buying it at, or whatnot. So a lot of different uses for the cap rate. This is not all encompassing. There are lots more things we can do to look at, but just real high level basic determination. Again, real quick, we're going to use the NOI. So the way we calculate NOI is top line revenue, our rent revenue. We've got all of our expenses, and then we would have cash flow, and then we're going to add back in interest, amortization, depreciation, and capital expenditures to get to that NOI number, because we need that NOI number when we're looking at cap rates. We're either going to calculate the NOI, or we're going to use the NOI to calculate the cap rate. A couple different ways we can use cap rates, right? So calculating the cap rate based on the purchase price. So in this example, we bought this property at $73,000, and we've identified that the net operating income is $7,300. So our formula is net operating income divided by purchase price equals the cap rate. So in this example, 7,300 divided by 73,000 equals a 10% cap rate. So again, real simple, NOI divided by purchase price equals cap rate. So if we know what the asset we're looking at buying is, and that's, the NOI is, we're going to calculate, X dollars in NOI, and we can buy it at Y price. Boom, we can calculate the cap rate that we would buy it at, and we would know that if we bought that property with all cash, we would be getting a 10% capitalization rate. Calculating the purchase price based on the cap rate we want to achieve. This is a great one. So again, $7,300 in NOI. We've identified the NOI, right? We know we've got $7,300 in NOI, and we want to buy at, we've decided that we want to buy at 9 caps, right? That makes sense for our portfolio. So that's a real simple. We take the $7,300, the NOI, divided by the cap rate we want to purchase at, equals our purchase price. So again, 7,300 divided by 9%, we could buy this property for $81,111. So great information when we're looking at buying. Great information when we look at selling, or even basing future projections. So in this particular model, we're taking and calculating the future value based on our pro forma, the NOI, and the cap rate. So we're going to say that our NOI is going to grow by 3% every year for the next 5 years, right? So we started out with that $7,300 in NOI. We're going to grow NOI based on our pro forma to get up to $8,216. we're going to say, all right, well, in the future, we think based on, interest rates or whatever else going on, that cap rates are going to be at 9.25%. So we would take that same formula of NOI divided by cap rate equals purchase price, or in this example, potential sales price. So that 8216 divided by 9.25, we would have an $88,821 future sale price based on this example. So a lot of different things we can use cap rates for. Cap rates are applicable in any asset class that you're working with in income producing real estate, whether it be a bare parking lot used for parking to, we look at cap rates in hotels, office, retail, industrial, multifamily, storage, and single family. It's applicable in all those. Although the examples here were very easy, small numbers, add zeros, whatever, all the rules apply the same. Just make sure when you are calculating them that you put the decimal in the right spot on the purchase price. A lot of times when I'm helping people and they're talking cap rates, they put 9.25 divided by 9.25 instead of divided by 0.0925. So just a couple things that people often run into. Thanks for paying attention and watching. Like my video, share it, or comment on any videos you'd like to see anything in the future on, and I'll try and get one made for you. Thanks, everybody. Have a great day.